Imagine waking up and seeing gold trading at $5,000 per ounce, and silver soaring to $50 or even $60 per ounce. That may sound like a dream, yet leading banks and market analysts now say it could happen soon in 2026. In this video, we uncover the global forces and the hard data that could make this the most powerful precious metal rally in modern financial history. Gold has already broken records this year, recently holding strong around $3,700 per ounce. Silver has powered above $44 per ounce, its highest level in more than 13 years. This is not a small move. It is the sign of a global financial tide that is turning. Behind these price surges is a powerful combination of factors: record central bank buying, persistent inflation, and a looming shift in interest rates as the United States Federal Reserve and other central banks prepare to cut borrowing costs to keep economies afloat. Let's unpack those forces. First, central banks across the world are purchasing gold at a pace we have not seen in modern history. Countries such as China, India, Turkey, and Russia are all adding massive amounts of gold to their reserves. For them, gold is a way to reduce dependence on the United States dollar and protect against financial shocks. The World Gold Council reported record central bank gold purchases in 2024, and that trend is still accelerating. When so many powerful buyers enter the market and refuse to sell, the supply of available gold for the open market shrinks dramatically. That alone sets the stage for higher prices. Behind these record purchases are powerful strategic motives. China and other Asian nations are working to reduce reliance on the United States dollar for global trade. Middle Eastern energy exporters want to anchor their wealth in assets that do not depend on Western financial systems. Even smaller economies see gold as an insurance policy against currency crises. This quiet global diversification of reserves means a steady, long-term demand that does not depend on day-to-day investor moods and is almost impossible to reverse quickly. It is like a hidden floor under the gold market, giving every rally extra strength. Second, inflation has proven stubborn. Even when consumer price growth slows for a few months, core costs for essentials such as housing, energy, and food remain high. Gold loves inflation. It has been a trusted store of value for thousands of years because it cannot be printed and it does not depend on any government's promise. When inflation eats away at the buying power of paper money, investors naturally seek the safety of hard assets like gold and silver. Third, the interest rate cycle is turning. For 2 years, central banks raised rates to fight inflation, but now growth is slowing and the global debt load is heavier than ever. Markets expect the United States Federal Reserve to begin a series of rate cuts soon. Lower interest rates reduce the opportunity cost of holding gold and silver. That is financial jargon for a simple truth. When savings accounts and bonds pay less, precious metals suddenly look far more attractive. Leading financial institutions are racing to revise their forecasts higher. J.P. Morgan now expects gold to average around $4,000 per ounce by late 2025 and to climb toward $4,000 in 2026. Deutsche Bank has already raised its 2026 forecast to $4,000 and admits that an overshoot to the upside is entirely possible if central bank buying remains strong and the Federal Reserve cuts interest rates faster than markets expect. UBS has spoken of a range up to $4,500. HSBC and other major houses are now updating their silver forecasts, many pointing to a strong climb beyond $40 per ounce. Some even more striking are the super bull scenarios now appearing in respected outlets, such as the Financial Times and Investing Haven. Analysts there are openly talking about gold hitting $4,500 to $5,000 per ounce in early 2026. They point to the combination of record central bank demand, persistent inflation, a weakening United States dollar, and deepening government debt as the perfect cocktail for a historic gold run. Silver is set to benefit even more dramatically. HSBC expects an average of $35 per ounce in 2025. Deutsche Bank looks toward the mid-40s in 2026. Wisdom Tree has said that momentum could push silver well above $40. Historically, silver moves 2 to 3 times faster than gold once a bull market is fully underway. If gold really makes a charge toward $5,000, silver could easily surge to $50 or even $60 per ounce. Silver's story is not just about investment demand, it is also a critical metal for the green energy revolution. Every new solar panel requires significant silver for its conductive properties. Electric vehicles use far more silver than traditional cars. Electronics from smartphones to medical devices depend on silver's unique ability to carry current efficiently. At the same time, global mine output has been flat for years, and new large deposits are rare. Analysts warn of a growing structural deficit where industrial use outpaces production. That means even without an investment rush, silver supplies are tightening. And when investment demand piles on top, prices can leap far faster than many expect. To put this in perspective, remember how precious metals behaved in the past. During the 1970s, when inflation raged and the United States dollar came off the gold standard, gold prices increased more than tenfold in less than a decade. Silver, during its 1979 to 1980 run, leapt from single digits to almost $50 per ounce in a matter of months. Earlier episodes tell the same story. In the 1930s, during the Great Depression and the collapse of many banks, gold prices were revalued upward when the United States abandoned the gold peg. In the 2008 global financial crisis, gold nearly doubled as investors fled paper assets. These moments prove that when trust in the financial system wavers, gold and silver can move not just higher, but explosively higher. Here is my view after weighing all of this evidence. My base case sees gold rising into a range of $4,200 to $4,500 per ounce by the end of 2025, with silver climbing to $45 to $50 per ounce. That alone would be an extraordinary rally and a historic opportunity for anyone who follows precious metals. But I also believe the bull case, gold breaking $5,000 and silver blasting past $50, is very much on the table. In my analysis, the most likely window for such a move is early 2026. What would it take for that to happen? First, central bank gold purchases must remain at record highs, something we are already seeing. Second, the Federal Reserve and other central banks would need to cut interest rates more aggressively than markets currently expect, reducing the cost of holding metals and weakening the United States dollar. Third, inflation would have to stay higher than target levels, keeping real interest rates negative and driving investors toward hard assets. For individuals, preparation does not mean rushing to buy. It means staying informed and understanding the tools. Watch the gold-to-silver ratio, which often signals when silver is about to outperform gold. Follow central bank purchase reports and monthly inflation releases. Diversify savings and stay patient. Education and timing can make a bigger difference than chasing short-term price spikes. Of course, no forecast is guaranteed. If inflation drops sharply, if the Federal Reserve stays hawkish, or if global growth surprises to the upside and strengthens the dollar, we could see a pause or a pullback. Gold might drift back toward the $3,300 to $3,600 range, and silver might lag below $40 per ounce. That is why risk management and careful planning remain essential for anyone considering precious metals. For investors, savers, and anyone watching the global economy, the next few months could be the most important period in a generation. The signals to watch closely are United States inflation reports, the pace of interest rate cuts, the strength or weakness of the dollar index, and above all, the monthly updates on central bank gold purchases. Those data points will tell us whether the move to $5,000 per ounce is just a bold headline or the next chapter in financial history. So I will leave you with this question. Will gold smash through $5,000 by early 2026 and pull silver to $50 or even $60 per ounce? Drop your own price prediction in the comments, share this video with friends who care about protecting their wealth, and subscribe so you never miss the next deep dive update on gold, silver, and the forces reshaping our global financial system.